This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashurdiz. Thanks for joining us at XM.com. The US dollar continues to bulldoze its way through the FX complex, crushing everything in its path. With the European economy under pressure from soaring living costs, the broadening shutdowns in China dampening growth, and the Bank of Japan's refusal to play the normalization game, there has been a perfect storm that favors the dollar. Euro-dollar got demolished yesterday, unable to benefit from Macron's victory in the French presidential election. Pessimism around the Eurozone's economic fortunes, growing bets for rapid-fire Fed rate increases, and the turbulence in equity markets are pushing the pair towards its pandemic lows. This is where the real battle will play out. It has been a similar story across the FX market. Sterling has caved under the weight of the mighty greenback as well, thanks to its correlation with risk sentiment and signs that the British economy is losing steam. The yen did manage to stabilize lately, albeit at very weak levels. The threats of FX intervention by Japanese authorities seem to have done the trick for now. Over in China, the central bank pledged to juice up the slowing economy with more cheap credit and attempted to slow down the yuan's rapid depreciation by loosening the FX reserve requirements for local banks. The Hong Kong dollar is in trouble too, testing the weaker side of its peg with the US dollar. With the Fed raising rates while the local economy suffers, Hong Kong authorities face a dilemma. Should they burn through their FX reserves to defend the peg or abandon it altogether? Defending it only works for a while as the peg becomes costlier to maintain the more the US dollar appreciates. Gold prices rediscovered gravity this past week, falling without a parachute to hit the $1,900 per ounce region as the negative forces of rising real yields and the strengthening US dollar finally overpowered safe haven demand for the yellow metal. In the stock market, Wall Street closed a turbulent session higher on Monday, with sentiment getting a boost from news that Twitter's board of directors accepted the offer from Elon Musk to buy the company. With dark clouds gathering over the global economy, while central banks and governments roll back support, equity markets have been in a sour mood overall. Yet indices like the S&P 500 have held up mostly because of the resilience in mega-cap tech names. Most of the tech complex will report earnings this week, starting with Google parent Alphabet and Microsoft today. This was today's Daily Market Comment. Thanks for joining us at XM.com.